And the title was PayPal Huge Stablecoin Incentives. We have been saying in the last few days that PayPal's numbers have been going up a hell of a lot, and we just didn't know why. We've kind of figured it out now, because there are a lot of incentives going on with PayPal USD in particular. So that's what we're going to explain in this part of the show. So the first thing I'd say is I've been pretty vocal about how I think stablecoins are the best business model in the world. It's pretty amazing. If you still don't get it, basically, usually when you give your money to a bank, you expect an interest rate in return because you know the bank is making some money off your money, so you should get a slice. But stablecoin providers, however, do not need to give holders any return because up until now, stablecoin holders have been happy knowing that their money is safe in the bank whilst operating in such a risky industry. And usually they get access to good rates on stablecoins in DeFi anyway. So that has obviously been hugely profitable for stablecoin providers because they can take your money, keep a lot of cash in the bank and earn interest, or buy treasuries and earn interest. And they earn a whole load of interest on your money and they don't have to give any of that back to you. But maybe, I guess what we're suggesting is that is changing now, or that's what I'm thinking is going to happen. Like that's going to change now. PayPal wants in on this market, but that means they need to disrupt the two main stablecoin providers. So I did a little look at the stablecoins earlier today, and we've kind of been talking about them as well already, right? Tether has a $117 billion market cap, and Circle has a $34 billion market cap. DAI is at 5 billion, and Athena is at 3. PayPal is way behind at 960, but its market cap is up 63% in the last month. So that's aggressive growth. So why is that happening? And the answer is, just like most things in crypto and most things in the world, frankly, is incentives. So there's two bits of information that I picked out, a couple of which I mentioned informally on the show a couple of days ago, and then a new piece of information that came out today. First, from DL News, they said that the key to PYUSD's success are the lucrative incentives offered to those using the dollar peg stablecoin in Solana DeFi protocols. Each week, PayPal provides lending protocol Camino and trading platform Drift with hundreds of thousands of dollars worth of PYUSD to distribute to users. Depositing PYUSD on Drift earns users over 16% annually in kind, while Camino offers around 13%. That's significantly higher than the 3.5% yield users can earn lending PYUSD on Aave, Ethereum's biggest lending protocol, where PayPal isn't juicing the yield. So this juice in the yield is being provided by PayPal, according to DL News, and also being targeted at very specific Solana protocols, being Drift and Camino. And actually, the yield is actually a little bit higher than what was reported when I was on the website yesterday. It was as high as 17 to 18%. Maybe that's changed a little bit now. I'm not 100% sure, but you need to double check that. The second piece of news, which I think is interesting, is that today we had Fortune reporting the following. They said when PayPal have joined the stablecoin wars in August 2023 with its dollar-backed PYUSD, the crypto industry celebrated the entrance of a TradFi company into a competitive arena that was dominated by Tether and Circle. But a year after its launch, PayPal is still lagging behind its competitors. As we just said, it's miles behind, basically. But in a bid to increase adoption, PayPal today, this announcement is from today, is partnering with Anchorage Digital, the only US crypto firm to hold a federal bank charter, to offer rewards to Anchorage Digital's user base of accredited investors who hold PayPal USD at its bank, at its US bank, its Singapore subsidiary. So it seems to be the case that on two fronts, on the Camino and Drift front, on Solana, there's these kind of there's this juice being provided to the yields by PayPal. And then you've also got this new product, maybe slightly more for institutional investors. It's like, look, if you want exposure to the crypto industry, if you want to do stuff by holding stablecoins, you might as well hold our stablecoin because we are going to give you some of that yield that every other stablecoin provider is never giving you.